from Delta team with us. Yeah, you just started the recording. Okay. Welcome, guys. I know to another session of our options masterclass. This is the fourth session, sponsored by Delta Exchange, home of crypto options. Thanks for the Delta team for making this happen. And here we have Anand Raj here from Delta, and we'll be covering off practical ways of using options, and we're gonna try to take some real trades. We're gonna talk about the thought processes, what we have to look out for when we're taking the options trades. So in the first three, or if you haven't watched the first three, please go ahead and watch them for this to make sense. And I'll leave the mic to Anandra.
Thank you, Conqueror. Welcome, guys. So, as Conqueror mentioned, this is the fourth sessions. In the prior ones, we have discussed the options in detail from the very basic level, the fundamentals of options, the Greeks in detail, how these option Greeks play a vital role, and how the crypto uh, they make a lot of sense, and what the purpose in crypto, since it's a very highly volatile market. So let's today understand the practical uses of the options here. So I'm sharing my screen and will directly straight onwards move towards the Delta Exchange website and start analyzing from there itself. So this is the landing page of Delta Exchange, where you can see this is the home of crypto options, and one of the biggest exchange for the options in crypto in BTC and Ethereum are over here, including the futures. And we here they do have the move contracts, which is basically the straddles. So we'll discuss that in detail. Firstly, let's come to the basic options, or let the option chain. So this in front of you is the option chain, which you can see over here. The underlying is written as BTC. Beside this, it is ETH, Ethereum. So currently, the options that are available are in BTC and Ethereum. The reason for keeping just for two underlyings are the exchange wanted to maintain good amount of liquidity, good amount of spreads, and the good amount of you know the buyers and seller difference, and the good open interest and all. So that's the reason they have stuck to BTC and Ethereum and managing quite good amount of liquidity on these contracts. These are the expiries. 22nd of March is expiry, 23rd is March is the expiries, and so on. So you can see 22nd of March. As you click this, you will get the underlying price over here, $28,160. Time to expiry 0 days, 3 hours and 20 minutes. That means this particular contracts will expire in 3 hours and 20 minutes. If you go on 23rd of March, you will see the time to expire is 1 day, 3 hours and 90 minutes. Likewise, you can move to other contracts and see in how many days these contracts are going to expire. So currently today we are speaking, and this is 22nd of March today. So this is called as D1 expiry as a technical term. 23rd of March is generally called as D2 expiry, means the day 2. 24th March, which looks to be a D3, but that's not D3, that is the weekly. On 24th of March, we have Friday. On Friday, we have the weekly expiries. So 24th March is the W1. 31st March is the second week, that is why it is W2 expiry, and likewise. We do have monthly expiries. 31st March is month expiry, 28th March is the month expiry, and 26th May is the month expiry. So you can see that the expiries on the Delta Exchange platforms are D1, D2, W1, which is weekly, Y weekly, monthly, and Y monthlies. So it gives a lot of opportunity in terms of making different strategies to play around with different expiries as the strategies. So let's come and see. So 28,150, that means something around 28,150 around. We'll be at the money for 28th second of March. So this area, so 28,200, this particular strike or this particular our options contracts are in the money, sorry, at the money right now. And you can make any strategies. We will definitely try to make some strategies today. We will try to make some trade setup today. So I'll come to this strategy builder, and if anyone would like to make some certain strategies, the best possible strategies or the most frequently used strategies in the market are already mentioned over here. You can go through them, read this meaning of the strategies, the execution part, the strike selection, everything is mentioned. And if you would do not like to select the strikes manually, you can simply go and apply, and the strategy will be executed in the accounts. Let's come back again and let's try to figure out a trade setup in real, which you, me, everyone can execute in the real market right away. Before proceeding to a real trade, I would ask if anyone is having doubts, can ask me, can raise over here. We are open for any open queries right now, because once we start moving towards a trade setup, we'll be moving further ahead. And so let's clear our doubts. The one last time, it's an open forum. Please speak up, raise your queries. Any doubts, man? If you could not speak, you can type as well. All good. Cool. So let's move further. Okay. So as you can see below the price IV, you can see the IVs. The IVs are currently 80 somewhere. We are seeing the IVs. So that means we are slightly, the IVs are high, and the IVs are high because tonight, we have the Fed interest rate decisions that are going to come out. So definitely there is an event in the market. There is a lot of expectations from the market, from the Fed. There is a lot of speculation that is going on in the market. Since this all is happening, the people participation has increased, and people have started making their positions. Let's first try to understand and see where people are actually making their positions through these options metrics. So one important thing which I use is this. So for daily, it looks like the high OI is built up at 29,000 on the call side. So people are not expecting market to cross 29,000. But that's below 1 million. I would like to have more open interest, not 1 million. So, okay, it's not that great as well for W1. Okay. Here they are towards the 22,500. So somewhere the behavior is saying that somewhere not above 29,000 and somewhere not below 22 they're expecting. And also let's look slightly towards the chart and see what the charts are saying. So yeah, definitely the charts look that yeah, on the upside there is a lot of fighting going on between the bulls and the bears. Price is not able to go higher, but definitely the price is not able to go lower as well. So we need to understand that yeah, price is actually stuck and is taking a pause and is waiting for some announcements uh, to make another next level of movements. Do we have any questions? All good. Okay. So yeah, so the price action says we are all good, and it doesn't looks like that we are going to any. But the only worry for me, if you see the price action on the prior price action, we do have a decent, I'll say decent resistance at this point, because price whenever it has touched these areas, it has taken the support. So multiple theories can be applied towards on this area, on this zone. This area was sort of a support area. Price used to come and bounce back again and again multiple times, not just one, twice, thrice, four, five, six, seven, eight, nine. and 10. So 10 times this particular price zone has worked out good, and then price consolidated for more than 15 days in these areas, and eventually thought to break the uh, support, and that's how the price from 29,000 came down to $17,500. And now again, after a lot of efforts of more than a year, price is again trying to come back to the same area. So definitely expecting price to face some resistance. If I'll say the price will have some the good news, or the good momentum in the market, but still believe price to break these kind of areas, it will not be easy. I'm not saying the price will fall back to again 20,000 or some levels, but yes, definitely the price will not find the easy path. So this is not the path of least resistance. There is lot of struggle over here, and the struggle can take at least a month or more. Okay, some very good news will be already. So I believe this time Fed might not be able to do great to people, but yes, some indications would come, and price might likewise pass some time, do some retracements on the lower level of 25,000 or 26,000, and then in the next Fed meeting, might be we may expect some good news, and eventually these resistances will then eventually be taken off. My personal experience, or based on my experience, I would say these kind of resistance which are built in the market, which have played a wonders in the past and are higher time based, eventually are taken by some great news only. Demand and supply forces on these zones uh, generally cannot do great. It is generally the news that take these kind of support areas towards the are taken off. Also, we speak on the flip zone side. So there are, as I mentioned, there are, as per the multiple theories or multiple technical analysis, uh, each and everyone is suggesting that there might be a big fall from here, but I'm not expecting a fall. I'm not expecting, because sometimes price in the market is having a habit of surprising us all. People might try to short the market somewhere here, and it might not work out that great, and when their patience is off, and then eventually we can see a small dip in the market or slight corrections or the retracement towards the downside. Let's speak towards the good buying opportunities in the market where price can actually stall if the correction comes around. So we can see, yes, this looks a good quality demand zone to me. So once we our technicals are clear, or once we have the zones in place, we can simulate some strategies. So so that will give us more odds in our favors. So this is good demand zone for me, which should handle the market, and this is also the demand zone which is responsible to break the prior highs and give a new high, or based on the pivot theory also, that the same pivot that is lying over here. So yeah, multiple confirmations suggest me. Let me see the moving average, what moving average are doing. So by the time the price, if retraces back or starts retracing toward the downside, this EMA curve will start flattening, and by the time it comes to this area, the EMA will come over here, and the price will confluence with the moving average. The moving average. So multiple areas suggest, if in case the price has to fall and it falls, expect there are least chances that 26,000 below we will see the market. Also, the what was the open interest on the call side? The okay, 22,500. Okay. So yeah, it's suggesting that there can be some profit booking sort of areas in the market. So let's come back to the option chain and try to make a position which is more towards hedge. So we are currently 28,000, 28,000, okay, 28,200. So we can look to sell the calls as well on the upside, because on the upside we are seeing a resistance at 28,000. So we can go above 28,000 somewhere. Let's say I wish to go at 29,000. Let me select some other expiries. Let's say I would like to select the monthly expiry of 31st. 28,000, 29,000 was $1,000. Okay. 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 Let me open my notes and Word file. Let me make one notes and see how the uh, uh, for 29,000 call option at $1,000. Okay. So let me sell this out. Okay. So it's just an experiment I'm doing. Let's see how we are getting success in this experiment. So it is nothing that I have made any trade setup ready made for you. I just want to see the process of making the trade. So next time you can go through the same process, you can do the same kind of mathematics. And it's all about mathematics. It's all numbers you have to play around. Okay. So just see how I'm trying to play with these numbers. So let's say if anyone is able to go into 9 to 29,000 call option at this, and to hedge this 29,000 call. Any questions? May I ask you why you check open interest to have a bias of a direction or to see liquidity? To have a bias about the market direction where people are expecting the market to go up or down. So what I got answer is that people are not clear. Like the larger population, the larger mass who have made their position, it looks that they're even not clear. So something weird we can see. Okay. Mostly whenever I've seen the big moves coming in, or whenever I've seen the good position being built up in OI, 90% of the times, or even I'll say more than 90% of the times, I've seen it working out good actually. But current open analytics, the open interest is not giving much of clarity, and this shows that the the investors, traders are not very clear. Okay, this why not, it's not supposed to be too great actually. This looks good. You can expect 22,500 below, market will not go definitely. So even this area also you can see 25,000. So people have started building the Y at various stages. So you can see, okay, some have built here, some have built here. So each and everyone is trying to run away at more lower strikes. So they're not pretty sure of what to do. Okay, some good positions here, some here, some here, some here. If all these four positions would have been standing at one particular strike, and they would have crossed the open interest of, let's say 2 million, 2.5 million. Okay, that would have given me an inch, that would have given me an odds, that would have given me an made me a comfortable position. Okay, this is particular area where decent OI has been built up. But right now they are spread in different strikes, they are not clear, even they are in doubts. Got it? Then give me a thumbs up if everything has been made support our buys. Yeah, correct. That's how we try to, understand our understanding of the market from the different metrics, if these are right. So I'm not saying that I will make my decision based on these metrics. I will correlate, I will make this study in confluence with the other studies. So my basic study will remain the price action. Price action is suggesting that yes, and there can be small retracements. Price is suggesting there will be some struggles. Price suggesting there will be some hurdles, resistance in these areas, and it will not be an easy path for the price to go up. So definitely the retracement can happen to these areas, and then we can see the bounce back again, and then again second time this area might not work out, and then eventually we can go toward the downside areas of 24,600 as well. But I don't expect these areas to be broken out that easily, 24,000 in the near market, because this is some resistance areas and have been taken off convincingly. Let's come back again to the, we were okay making a trade setup for you guys for 31st of March. 29,000 I was selling for $1,000, let's say. And to hedge this position, As per this, if market doesn't stop at 29,000, at 29,000, it can go to 31,000 or towards this top of 3132. Okay, so 21,000 I'm selling for $1,000. So I have already taken $1,000, so I have to hedge this position. What I can do, I can buy 30,000 call option, right? Okay, I can buy 30,000 call option or this, but that's not solving purpose because. So what I'll do, okay, I've got one clue. Let me test that out. I will sell 29,000 call option to hedge the position. What I'll do, I'll buy 30,000 call option at for the price. Let's say I got it at $680. Okay, $20-30 can be here and there, but it's okay. We are trying to, the price values might change and differ accordingly. Let's try to stimulate this in strategy builder and let's see what price can do for us. Okay, so on BTC 29,000 call option. And 29,000 30,000 call option I would like to buy. Okay, so yeah, one call sell and one call buy is over here, sell buy and this. So let me come to the payoff graph and see where the loss will start coming in. Okay, let's play around this area first and understand where the loss on the lower side. Okay, on the lower side we don't have a loss. We will start having the loss because we have sold 30,000 call option. So losses will start happening after 30,000. And what on this graph it is showing from here 27,630. So something is wrong. What is wrong? 29,000 call option strike 30,000 940 and 700. Yeah, that was the price. Sell and buy. Okay, so then one. Just a minute, guys. I also have one. I have made a local payoff graph for me. Let me put the values in that as well. So let me. I am buying one call option. I'm selling another call option. I'm selling 29,000 call option. No, I'm selling 29,000 call option over here. I'm buying 30,000 call option over here. LTP for 3,000, let's say 760. And for this is $1,000. On the upside, 20 on the downside. Hmm. Are you guys understanding what I'm trying to do?
It's better you explain, Anand, a bit.
Okay. So guys, what I'm trying to do, I am trying to, I have since I have sold the 20, see, so let's stick to one leg. So the purpose of each and every leg will be clear. So I'm selling 29,000 call option. Let's first speak of the first leg, this one, the one which I am bolding and making slightly, bold for you guys. So I'm selling the 29,000 call option at $1,000. So which is basically this one. The reason for selling this at $1,000 is that because I'm not expecting market to cross 29,000 because of this resistance. But since we have an event in place, if this scenario would have happened, let's say uh, after the event, I would not be hedging that aggressively, but yes, definitely I would be hedging as well. So to hedge this area, since I have already 29,000, I have sold it. So I'm selling it. So that means I'm taking the credit. This 1,000 rupees is the credit that I'm receiving actually. So since I have already received 1,000 credit, so I'm paying something from this 1,000 credit. I'm buying an insurance of my position so that I may not acquire a big loss. So what I am trying to do, for the premium which I have collected from here, I'm just trying to hedge that out. So the one thing looking is that if either I can buy 30,000 or I can even go slightly higher and I can buy 31,000 to call option. So that looks more better game to me. Buying the 31,000 to call option at uh at $500, let's say. Okay, but that will not be giving me any profits then. Because ultimately this will expire worthless and the amount will become zero. So the amount is okay. So this is not a better solution, guys. Okay. So this kind of experiment we have to do. So once we have to become good in options, we have to try these kind of strategies. We have to do take with the premiums. We have to play with all these things. So so this is the actual reality which I'm trying to show. I'm not just that I have come with proper trade and I just say everything has happened within a flick of fingers and all. So it is something you have to do something with mathematics. So I would like to I would I that's why I want that either you guys understand the process. Also, if this is not working out, we it doesn't mean that we don't have any position to take. We can decide something else as well, na? So what we can do, we are not expecting market to fall because we have EMA in place. So what we can do, we can sell the puts as well. So let's say if I would like to sell 20, let's say 25,000 put. Let me see what 25,000 put is telling me. 25,000 put, if I sell, it is at $300. Okay. Okay. And to help this out, what the price action says, if 25,000 doesn't hold, then we might has go to 24,000 as well. So 24,000 if we buy is at $180. Okay. This is sell. This is buy. Okay. So okay, so we are selling this and we are buying this $300 here and $180 we are giving over here. So net debit or the net credit that you are receiving is 300 minus 180. So roughly around 220 credits you are getting at home. Okay, $220 you will get at home. So let me again go back to this area and make strategy for you where you are selling puts. Okay. So, oh my goodness, I had Future Plus last time. That was the reason the graphs were not right. Uh, so, so right now we are trying to play with the puts. So I'll do -1, which I am selling the puts. We can buy one puts. So I would like to keep it more in the manual way because that's how it's more intuitive. That's why I learn more. That's why I play more with these options and just see. So
And
25,000 is
actually, we can use the strategy builder, no?
yeah. I tried doing that as well. It was looking slightly, the way I was expecting it. Do you confirm? Please like confirm. Yeah, confirm. Okay. So let's do with this. On the port side, we are choosing 25 and 24. So let's say 25,000 call option virtual trade I would like to sell, and we are not getting 24,000 puts over here. Hmm. We are not getting 24,000 puts over here in this platform. So we have to discard this. Concur, for this time I'm taking this because we are not getting 24,000 puts. So I'll understand the rationale of this as well. Don't worry. है ना?
No, no worries.
Cool. So 25,000 and 24,000. So we were selling the puts at $300 and we were buying the puts at $180. $180. 25,000. So we are selling the puts. So we'll start from our analysis from, let's say, 23,500, 23,750, 24,000, 24,250, 24,500, 25,000, $25,250, 500. Initially, guys, you will take some time in building this, and it is okay. In the beginning, it should definitely, you should spend some time into this so that you enjoy the process. And believe me, this is a very interesting process because that's the more you play with the options, the more experiment you do, you'll get more used to this. So what and the behavior we are seeing that the maximum loss of $180, and this loss is starting. Uh the loss is starting. Uh the if it starts moving above 24,000. Okay. Yeah. It should not be the case. So okay, sorry. Okay, this is the payoff graph. Yeah. So what we have seen, the loss is starting below 24,500. Okay, got it. Got it. Got it. This area, $300. Hmm. So some of the spreads are not, we are not in a position right now to make this kind of strategy. But yes, day before prior I made it. That time the premiums were in a comfortable position. Right now the near strikes premiums are very high, and slightly far premiums are not very, not are also high, and that is why we are not able to get twice the ratios. So credit spreads I am not able to make. But what I would love over here to make is, I'm not expecting market to cross 29,000. So what I can do, I can buy 29,000 call option. 29,000 call option is at $440 something, or even I can take 23,000 23rd March expiry. So 29,000 call option is at $300, and this is $450. Okay. On the lower side, I'm expecting market to come to 26,000. So let me see, 26,000 put is giving me $120. Okay. So $120 plus 400. $440. So it is something roughly around 550 $560. So any movement in the market above $550 will make start minting you money. So at this point in time, what looks more favorable to us, keeping inside the event in place where the market IVs can slightly go more up as well. Uh, we can look to hedge our positions and buy the 29,000 call option, and on the lower side 26,000 put option. So let me tell you how we are trying to you know understand this and how why we are trying to play this area. So 29,000 puts and this is 26,000 puts and this is calls. So this was something around 400 and this was something 26,000 is, let's say, $110. Okay. So see, let's speak of 1 to 1 lakh first. I'm giving them numbering as 1 2. Okay. Let's speak of this part first. So this leg will come in profit when your puts or the market starts falling. Okay. This leg will come in profits when the market starts moving. My goodness, I've written opposite. Okay. So what the beauty of this particular the strategy or the position is, you can make the money. Here you are not guessing the direction of the market. You are not saying the market will go up or you are not saying the market will go down. Here you are playing on the momentum, because what I'm expecting that this Fed meeting is gonna be very crucial, and definitely we can see any blast movements in the market, because as I mentioned that this kind of actions or this kind of support areas are taken off by the big moves in the market, by the big events. So maybe even these areas can might also be taken off. Or on the downside, if we start seeing some selling pressures, we can definitely see the markets coming towards the downside of 26,000 or let's say 25,000. So that means from 28,000 to 20, let even if we count 26,000, so that's a $2,000 move in the market. Let's speak of the opposite side. If we see even market going till 32,000 or let's say 31,500, so that means there is a move of around 3,000 from this current point. We are currently at the midpoint. Definitely price has to either touch this particular support areas of this or the resistance areas on the top. So on the downside here, definitely we have seen that there's a movement of more than 2,000 points. On the upside, we see there can be a move of 3,000 points. But at the end, we don't know which direction. And that is why we are confused. And that's why we have seen the broader sense of the market as well. So in that case scenario, what looks apt at this point in time to buy the calls on the upside, to buy the puts on the downside, and any direction the move comes, you can enjoy the momentum of the market and not guessing the direction of the market. Any move in any direction, you will start making the money, minting the money. Okay, let me build this in strategy builder and show you. Sorry guys, today we are not in a position to make much of positions because the IVs, because of the events are in such a way that 24th of March we are choosing. Okay, on the downside we are choosing 26,000 puts. On the upside we are buying 29,000 call options. So we have both the buy, 26,000 puts we are buying, 29,000 call option. This option will give us the so this lag will give us profit when the market falls, and this profit portion will give us the profit when the market falls. In cumulative, since we are paying $400 of premium, we should be in profit once we see the movement coming. So this is the payoff graph. You can clearly understand from this. Okay. So this is the net. This is the area where you will not be in the profit as per this graph, and these graphs are made keeping in assumption few things that the IVs are not changing, and also this is the graph on the expiry date. Okay, if the expiry happens at this price zone, then what happens? So this graph is made keeping few things in consideration. There can be slight variations before the expiry and on the expiry date. Let's do a study on this. So 29,000 call we are buying. Even if the price comes at 29,000, you will see that we are starting minting the money. Okay, okay, this way. That's how we are starting minting the money. On the downside, if the price starts moving toward the downside below, let's say 27,000, we will see that okay, we have started minting the money here as well in a positive territory. So the beauty of this strategy, which I have presented in front of you, that we are playing the momentum and not the direction. And since we are in a phase where we have an event in place, a very crucial event, the price is suggesting that there is a potential move on the upside or even the downside. But yes, definitely there is something that is going to happen in market. On the upside, we have a potential of 3,000 points. On the downside, we have potential of 2,000 points, and we are paying a premium of around 400 or $500. So any movement above $500, you will see that you will start minting the money irrespective of the direction. So that's how it is slightly hedged. I'll not say you are completely hedged in this position. You are hedged, but you need a movement in the market. The only thing that can happen with you wrong with you, if the market doesn't move actually, if it expires within this area. But nothing to worry if you don't see the move coming or happening before after Fed outcome, after Fed meeting, after 6 hours. If you don't see any movement coming, you can try to adjust this position by selling the top calls over here and selling the puts over here, and likewise. So there are multiple ways to hedge or adjust your positions. You can consult me over link over Telegram. You can request Conqueror, and Conqueror is also aware of how to do adjustments. So that's how you can simply has the positions. And if any case you come in slight losses through selling calls and put, you can adjust those agreements. But likewise, in the current scenario, it looks like there good is gonna be big movements, and buying the call as well as the put option makes a sense. And the which calls and which puts to buy, which I have mentioned to you as well. So this one, I feel very grateful at this point because we have expiry in hand. We have chosen 24th of March. That means we have 3 days in hand for the expiry, and that's the more than sufficient time for the market to make a move of $500. Guys, are we having any doubt that market will not move $500 in any direction in the next 3 days? Just give me a yes or no. Guys, give me a thumbs up if you believe in the next 3 days we will not be able to see more than $500 or move in any directions. Fed interest would definitely move. So that's how we will move definitely. High probable. That's high. So every trade in options is a high is made of the intention of high probable. In today's scenario, this is a very high probable setup. That is why I would like to stick to this point and would not like to discuss other things which doesn't make sense at this point in time. Concur, anything you would like to point? Because for me, I believe today we can discuss this strategy, and we can stick and we can wind up on this strategy, and next studies can be discussed in next sessions.
I think it's fine because the thing is today's FOMC day. So yeah, as you said, the IVs are crazy, and it's really hard to find interesting trades right now because the whole market is messed up right now. It's very indecisive. So, for the next one, I think there's nothing much we can do right now. But for the next one, we can create hypothetical situations and try to find trades for that. hypothetical situations. Like I'll give you a situation, you can say how we can position ourselves to that, and we can do that kind of practice. But for today, I think it's fine.
Cool. So nice, guys. And as you can see, the IVs are very high, 100%, 105. So these kind of IVs are very rare to see. We can hardly see this kind of IVs twice or thrice a year. So not an easy thing to watch. So be safe. Happy trading. It was nice to have you guys on this meeting. Any doubts, ping me, or Conqueror is always there for you guys. And as mentioned, this trade looks good to me. Do your own analysis. And if you feel it good, feel that more than $500 a move is about to come in the market, rush it out. Thank you, guys.
Thanks, Anand, and thanks everyone for joining, and see you in the next session.